Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we've got a shorter trading day with markets closing at 1 o'clock. This morning, we have a jobs non-farm payrolls report hit the markets. We did have better than expected jobs report, came in at 147,000 jobs created versus 110,000 that was expected. So the markets like this information and continue pushing up higher. Then oil actually started falling on the potential starts of negotiation talks with U.S. and Iran regarding their nuclear program. So tensions are easing there and oil starting to come back in ever so slightly. Let's check out the market summary and see where stocks are moving today. So you see here, we've got the Dow Jones up 0.69%, NASDAQ up 1.03%, S&P 500 up 0.78%, U.S. oil down 1.01%. Gold is falling ever so slightly, down 0.68%. And then Bitcoin is up just nearly 0.4%, now 0.38% on the charts. All right, so let's jump into the S&P 500 heat map. And we see with a slightly positive day, we've got a ton of green on the screen, but nothing's really excelling that much. We have some smaller stocks we're going to get into later on that were pushing higher today, but the big mega caps really weren't pushing too much. We see NVIDIA up 1.28%, Apple up 0.52%, Microsoft 1.56%, Google 0.5%, Meta 0.74%, Oracle, nice push there, 3.14%. Netflix, as always, back to the green side for Netflix. Amazon up 1.55%, but mainly a lot of green here on the screen. Tesla slightly down 0.13%. Into the S&P 500 with the SPX daily chart. We've been highlighting that we've been overextended for quite some time. We're bubbling up in RSI territory above 70 as well. Plus, we're starting to get ever so close to this resistance trend line that's created from the bottom portion of this blue parallel inclining channel. So that tells me the likelihood we will stall out or start having a pullback in the near future is increasing day by day and tick by tick that we get closer to this level. One thing, and also keep in mind, if you didn't catch some of the information I said earlier this week, we are in a holiday week. Plus, we're in summertime volume. Usually during the summertime, investors, institutions like to take their vacations. So you'll have periods of lower volume during the summer. Since we are entering that time frame, the likelihood for neutral to positive bias actually increases, just ever so slightly higher grinds on the charts, unless we're overextended and unless we have news develop like tariffs that are not going to be positive for the chart. So that's what I'm paying attention to in the weeks moving forward. What are these tariffs going to do to rock the markets? Any other new geopolitical developments will also be paid attention to very closely. With a lighter volume, if we do have a disturbance, we could see a sharp sell-off. So I'll be ready and waiting for that too. So with that being said, watching this level of resistance, as that will be key on the chart here on the SPX. Next up, the Qs also really close to resistance, as well as RSI in the overbought territory on the daily chart, implying we should pause or see some sort of pullback in this general area on the Qs. Pullback area, the first area, minor support, 535.88, but the major support, first one, is going to be 516.53 cents. Into the SMH. The SMH was the high flyer as far as making brand new all-time highs today. The other indices did too, but this index has not yet reached all-time highs in this mammoth push up. Today, you can check that off the list. It's been done, but just like the other indices, we're overbought right now, extended on the charts. It makes sense for some sort of pullback, at very least some sort of consolidation. Plus, today, we tagged that bottom end of this inclining parallel channel. We'll see if by next week, if we have some other institutional players come back after their holiday weekend, if we do start seeing selling pressure hit the markets, as they will start hitting the take profit button and capitalizing on those fantastic gains that were generated through this ride up on the charts. Next up, IWM. Now notice here on the IWM, I kept this resistance trend line here to highlight a fact of what can happen sometimes on resistance areas. Notice price action closed yesterday just slightly underneath this resistance channel or resistance trend line, and it closed at it closed right here just underneath, but then it gapped today over. So it gapped over this resistance, and it gave gave this index strength to continue pushing higher. Now, I have been saying this for the last couple of weeks too. IWM is the place you should be looking to buy during this time frame, since it is so much lower on the charts compared to the other indices that we view and study each and every day. So there's more room to run for the small cap stocks and this small cap index right here. So far, we've seen that play out, but also it is getting extended. It would make sense we start consolidating before we attack the next area of resistance at 229.30. Any consolidation or pullback will be buying opportunities for a continued move higher on the IWM. Bitcoin here we see today. Notice the close yesterday. So we're pushing higher today, but yesterday's close closed beneath this declining trend line, and price action today excelled higher through this area. So far, right now, we're trading underneath confirming zone for breaking out both above this declining trend line as well as this 50% area of the parallel. We'll see where we close tonight at 8 o'clock. If we close above this pivot high at $109,823, that will then create a support area on this trend line, increasing probabilities for a higher move up on Bitcoin. So critical close today for Bitcoin. Be watching that on the charts around 8 p.m. Eastern time. Into gold, much like with oil, with these renewed Iran-U.S. nuclear negotiation talks, the stress as far as any geopolitical tensions is easing, which is then pulling back some demand for gold. And we see that ever so slightly displayed right here on the chart, more or less a pause day, not too much new to report for gold. Support area down here, 340 or 32.42. Topping tail and the high will be the first area of resistance around 3,500. Should we get above that, 3,621 is the target for gold. Next up, silver. Silver, I've been mentioning this for quite some time. Silver is a great buying opportunity. Any dips, especially down here to the support of 34.86, would be a nice spot to accumulate more silver. Silver, the last 4 trading days, has just marched right on up on the charts. Next stop for it, if it continues higher, is this measured move up here at $38.97. As discussed, U.S. oil did have a slight pullback today. Notice this resistance trend line that I left on the charts too at $67.12. Yesterday we pushed higher. Today we're coming right back down. That just highlights the fact that we do have this area of resistance. And then also notice at the bottom of the screen there, mastering the overnight trade, the sleeper hold. We've got special pricing for all of our educational courses on our website. They'll be available with this discount through Sunday. So folks, take advantage of the discounts while they're here. Much like we like to buy stocks when they're low on the charts, buy these educational courses while they're on discount so you can benefit, start making more money on your trades, and also knowing when to get out of losing positions. Next up, we've got Nat Gas. Nat Gas here, you see on the charts, came down the last several days, caught support right here at $3.38. The last 3 trading days, we have since then bounced up, forming bearish consolidation here on the chart. We haven't yet reached this resistance trend line here at $3.61. And yesterday I noted with the violent price fluctuation here on Nat Gas, this is merely going to be a small speed bump of resistance. The area of resistance I'm looking at more so if Nat Gas does push higher is up here on this trend line right around $3.93. If we move lower, $3.13 is going to be that support area. We'll see if that bear flag plays out a little bit further, increasing probabilities for that support zone to get tagged. Next up, we've got the 10-year. 10-year pushed higher off the back of the good jobs report, as we see, but this sort of movement doesn't really change much that's happened in the market, nor the 10-year, as we've been fluctuating in this area for the past several weeks and months. The main thing to pay attention to is a break beneath either one of these trend lines, or a break above of this trend line rather. That would then imply more upside is to be had on the 10-year. A break beneath would be very beneficial for folks looking to get mortgages and potential folks looking to buy brand new homes. Next up, DataDog. DataDog was one of the biggest winners on the S&P 500 today. You can see up 14.92%. Great move on this stock today. In doing so, it has flipped this resistance area to support. But notice where price went through today. We went straight through this 50% area of the parallel, but yet we're starting to close right here on this trend line. Now, this trend line dates back over here from a major pivot in August of 2022, strung out to the high here in February of 2024, and then strung through price action that occurred at the end of last year into this year. Notice when price came up, it got rejected. Now we're starting to have price come right back up again, and price is putting on the brakes right here on DataDog. Look down here at the bottom of the screen, RSI extended. If I flip to the weekly, you can see we're just barely touching the 70 area. Needless to say, this chart is extended. A pullback is likely before we start moving higher on the charts. So anticipate any sort of pullbacks here on DataDog to be a buying opportunity to reattack that trend line up here on the charts. Next up, FSLR. FSLR also had a nice move higher today, pushing above this inclining trend line that was holding price down over the last several trading days. But today, notice it tagged and basically kissed this resistance area at $189.64 and has since pulled back ever so slightly. But today's move is a confirming move above this trend line, providing this now trend line as support. So any pullbacks down here, 173.60, or in this general area, will be a potential buying opportunity for First Solar to continue marching up higher to the next resistance area at 206.89. Next up, we've got Symbotic. Symbotic has made a fantastic move today. As you see, also closing above an inclining trend line. There was a day trade we did make on this on the day trading room this morning. It was a very quick trade up into this trend line and a nice pullback. That trend line, what's so neat about this this area right here in the trend line, this is a 618 fib retrace from the pivot high back here in July 23 down here to the pivot low. So price, when it came straight into that area, it made sense there was going to be some resistance right into that trend line and pulling price right back down, allowing us and the members to make a nice small profit there for a day trade. Next area of marching, should Symbotic continue moving up, is going to be $53.91. One thing to note though, again, down here, the RSI, it is beyond extended. So I wouldn't be chasing this sort of move, folks. I'd be waiting for some sort of pullback. And you notice we've got consolidation with a couple pivots right here, just over $41. That would be the spot to really get in for a good long off of this good momentum move with Symbotic. Don't chase. Wait for a pullback at least to this area, because we could eventually, stocks go higher and lower than you anticipate. You never want to put yourself in a chasing situation, because you could be out of the money in no time very quickly when that price reverses. So make sure you wait till around the $41, $42, and potentially even down here at $37.41, which was previous resistance on the charts. Last up, we've got CAVA. Now, CAVA has confirmed a breakout today. And I'm talking about a breakout from this one declining trend line we see here on the charts that's held price back down since earlier this year, since February of this year. Now, with price breaking above that area, this does now trigger a potential breakout for a move higher on CAVA. That means any pullbacks would be buying opportunities for the next resistance area at $94.17. Notice here, we're not quite at 70, but then this is also a great learning lesson for any individual. Whenever you see a breakout, you could choose two things. You could choose to buy it straight away, which I don't recommend, or you can choose to wait for a pullback, then buy, because that's the safer play. Because usually, again, stocks move higher or lower than you can anticipate. But when a breakout does occur, it usually is right towards being extended and overbought. So it makes sense. Wait for that breakout to signal. Once it confirms, wait for the price to come back down, buy that stock for that reflex, then return bounce up to the next resistance level at 94.17, which is this declining trend line. And then we play that game all over again. If we break out here and confirm, we could sell the position, then buy it again when it comes back down into the trend line for that move up to the next resistance of 109.13. Everything is very cyclical in the charts. All we do is like to rinse and repeat and keep making profits, because these patterns repeat over and over again. That wraps up Trading the Close. Thank you guys so much for joining me this week. We've got the 4th of July this weekend here in the United States. Everybody be safe. I'll be back here in the office on Monday with more data and trading levels. Until then, you guys have a fantastic weekend. Take care.
Hey guys, Lawton here with Verified Investing, and I am so excited to announce our brand new partnership with Kinesis. Kinesis is a revolutionary concept. They're able to create cryptocurrency that's tied directly to gold and silver in the form of KAU and KAG. You can send in your gold or silver and convert that directly into tradable currency. Another thing you can do is buy their gold. You can convert your US dollars or whatever currency you want into KAU and KAG. You can withdraw that and actually receive physical gold and physical silver. This is absolutely revolutionary. We know with how volatile everything is, it's important to have things grounded in silver and gold, and Kinesis is a great way to do that without the risk of having to go out and buy gold and silver bars yourself. They also have a trading platform directly linked with TradingView that I advise you all to check out. Thank you so much to Kinesis for sponsoring Verified Investing.